All good. Thanks, Tim, and good afternoon, everybody. Very excited to share with you all the Xpon story today. If we just go through, thanks to the next one again. So Xpon, I'll go through the next one again. So Xpon's essentially a marketing, technology, and cloud company. And to put in the simplest terms around what we do is we help our customers make sense of their customer data, and then we use that to help them unlock exponential growth. And there's a lot of really big macro drivers that are really driving demand and providing some very strong tailwinds for us. We go to the next slide, please. And there's 4 of these different trends that are converging at once. So first of all, you've got this mega trend around data security and privacy. And we all know as consumers how much more aware we are of how information is being used online. And I guess that consumer awareness is also being matched by the regulators all over the world. Also, the technology vendors, the main internet technology vendors, so the Googles, the Apples, the Microsofts of the world, they're actually removing technology called third-party cookies. And those third-party cookies is technology that's used to actually track what consumers do online. So you've got this trend where governments are making it more rigorous around privacy, and you've got the technology vendors removing the ability to track information through third parties. You've also got this trend from consumers who are really more interested in these really personalized experiences. And there's a bit of a balancing act there because, excuse me, the balancing act really is you don't want to be creepy, you don't want companies to know too much about you, but you still want a really personalized and relevant experience. And then finally, you've got this sort of increasing trend around extended reality in the metaverse. And we feel Xpon's really well positioned around that. With our Holoscribe platform to take advantage of that trend as that starts to come through in the coming years. So we're really well positioned in the convergence of these 4 trends to take advantage of that and really continue to grow at the pace that we've been growing. Next slide, please. So how we're structured around that, we have an Xpon Technologies business unit, and that's our business that really helps our customers implement these technologies. We're also a partner with Google, and we resell some of Google's technologies. So that's a great channel for us because Google provide us with leads that we can then bundle and package our technology with. And our 2 technology platforms are Wondrous, which is a customer data platform. And essentially what Wondrous does is it takes all the information that our customers or our business clients have about their customers and consumers. It centralizes that in a really privacy compliant way. It uses machine learning and AI to then enrich that data and add value to that data. And it does that with things like machine learning predictions. So it can predict behaviors of customers, which customers might have a propensity to churn, which customers might have a propensity to buy more, which customers have a high predicted lifetime value. And then once that machine learning and AI has done those predictions, those insights then are available to activate directly back out into the internet ecosystem. So we have native integrations with platforms like Google and Facebook, LinkedIn, Shopify, HubSpot. There's lots of different integrations that we have. So our customers take this really rich machine learning powered data, use that then to synchronize back out in a very privacy compliant, anonymized way, and then can get much more effective marketing outcomes. And that could be things through things like digital advertising, or it could be things like better customer experience as well. And I've got a case study that I'll talk to in a second to explain that in a little bit more detail. And then just quickly there on our Holoscribe platform, that's essentially a bet on the future for us. We've got some great traction with that already. We got into that extended reality space quite early. And we've got some very good customers that are using that to build out these really rich immersive experiences. And how we differentiate with that product is it's the only extended reality platform that's natively integrated into a data platform like Wondrous. So we can actually use all that really rich data that's in our data platform in Wondrous to power these very unique and personalized experiences in this new immersive world as well. Next slide, please. So just to sort of paint a bit of a picture of where we sit in the industry value chain. The way I like to think about this diagram is each of those different sort of circles along those different lines are like subway stations or train stops. And how Xpon works, and particularly our Wondrous customer data platform, it allows us to actually grab data from all these different sources that a customer might have on their customers and consumers. And that could be things like their CRM or their point of sale or their loyalty systems. There's lots and lots of different systems. Most big companies have up to 200 sources of information. Typically with our customers, we find they have between 6 to 8 primary sources of information. And then we can pick which train stop or what part of the journey that we start a relationship with our customer. And that's really a key part of our land strategy for the business model, is our customers don't need to buy everything. We can fit our technology into their existing tech stack. It's not a suite like some of the big vendors have where you need to buy everything to get the full value. And so to give you a working example, let's pick digital advertising as a use case. One of our customers may have a need to get better return on investment from their digital advertising. They want to use their data to make that return more effective. We can start working on that with them. We can prove value very quickly. We can demonstrate ROI, and then we can incrementally deploy across all those different parts of the industry value chain. So we unlock all these data silos so the entire organization can benefit from it. And it's not just marketing teams, that works across the entire organization. So primarily our key buyers are CMOs, but we also sell into CTOs and CIOs, chief digital officers and chief data officers as well. Go to the next slide, please. So I'm often asked what the strategy is for Xpon. I think this diagram does a really good job of explaining that really simply. Because of those convergence of those trends, they are creating some really strong tailwinds for us. And that really is a once in a generation opportunity to land customers. And as I've explained, we land them typically with a single use case and solve a single problem. And then between our technology and our strategic capabilities, we then expand across all those different stops on the subway station map that I showed you before. Now, we have very, very strong unit economics, and we'll talk to that in a second, which means we're very profitable at the underlying customer level. Now, we're still investing heavily in growth at the moment, so at a company level, we're not profitable yet, but those strong unit economics is really what's creating the operating leverage for us to get into profitability and into cash flow break even. And we're targeting to be cash flow break even next financial year for the full year. Next slide, please. This is just a quick case study of the University of the Sunshine Coast. They're a good example of a customer where we're working across multiple parts of our solution and our technology stack with them. So this uni, COVID hit 3 years ago. Obviously, they couldn't do on-site open days. They adopted our Holoscribe platform quite early in the piece. So we built out their first virtual open day in a really immersive environment on Holoscribe. We also implemented our Wondrous platform in that first year. And the main purpose of that was essentially to collect all this really rich data that was being generated through that Holoscribe experience. And so that university was able to use that experience to capture all this data, things like, were the people going there students or parents or mature age students or school leavers, what their study areas of interest were, whether business or marketing or whatever. So all that data streamed directly into our data platform. Now we're into the third year. I think they launched this about 2 weeks ago, this year's open day experience. So all that data they've been collecting over the previous years is now being used to make the experiences even better and even more richer and even more valuable to that customer. So you can see one of the call out metrics there around this is the engagement rate. And in this example, it's the average pages per session. So it's 3.7 times more effective than any of the other digital content they have on their website talking about open day as well. So there's a link on the slide there. So if you do want to have a look at it, you can follow that link and check it out. Go to the next one, please. And this is just another case study. This again is talking specifically to a Holoscribe platform. Amnesty International has been a great customer of ours for a number of years. Their team used the platform to get information out very, very quickly about some of the atrocities that are happening in the Ukraine. So their team on the ground were able to capture this really rich 360 immersive content and in a matter of days get that up and get that circulated all over the world so people could go and actually see in a really immersive environment just what was happening on the ground there. Next slide, please. So just some key highlights. So this is our FY22 financial results that we released recently. So we've had very strong growth across all our metrics. Revenue, annualized recurring revenue, I should say, up 78% year on year to 16.4 million. Our revenue was up 145% to 13.1. Gross profit up 169%, and our gross margin continues to expand, up 6 percentage points on the previous year. And probably the other key highlight on that is 93% of our revenue is recurring. So we've got very, very strong annuity revenue streams. which gives us a lot of confidence in being able to invest into the future and predictability into what's coming next. Next slide, please. This is just a view of the half-yearly results over the last few years. You can see there with revenue, gross profit, and gross margin. And again, that land and expand sales motion that we have, you can see that really paying dividends as the gross profit and the revenue continue to increase exponentially half on half. And again, our gross margin continues to expand as we can consistently executing as we go. We've got a target to get that gross profit margin in the 70 to 80% range. Currently, it was at the end of last half 65%, and we're very confident we'll be able to do that over the coming periods. Next slide, please. And just to provide a little bit more color on the revenue and how that's made up. So the stack chart there on the left, that's the 4 different streams of revenue that we segment by, that we disclose. So the usage fees, so that's fees, consumption-based pricing that we have, fees that are generated for how our customers are using technology or how they're spending money on advertising. Because of our partnership we have with Google, we're in a very good position that we get to get a clip of the ticket for every dollar that they're spending on advertising that runs through the platforms. And that's at 100% gross margin to us. So it's still a small part of our revenue mix, but a growing part and a very high margin part. And then the other components are our project services, which are one-off onboarding and implementation fees, which is very low, 7%. And then there's a mix of the software licenses and what we call managed service subscriptions. So one of the things that we do quite differently is when we sell a software license, we'll attach a managed service subscription to it, which enables us to stay very close to the customer and make sure they're getting success out of the technology on an ongoing basis. And just a bit of mix on the revenue mix by geography. So Australia is still the majority of our revenue. The UK is just shy of 40% of our revenue. That mix is shifting. You can see there it shifted 5% year on year compared to the previous year. We do expect the UK to continue to grow. Australia is still growing very quickly as well, but we do expect that the UK will be a bigger contributor to our total revenue pie over the coming years as well. Next slide, please. Here's just a bit of a waterfall view of our annualized recurring revenue growth. So you can see each quarter, we're just consistently adding new recurring revenue. That grew 78% year on year. We exited June at 16.4. Next slide, please. So the unit economics, and this is something I'm really proud about. The team does a very, very good job of executing because a lot of these metrics are absolutely world-class. So we don't churn very many customers at all. It's very sticky. What we do, we have a 99.5% customer retention rate. Not only do we keep our customers, but because of that land and expand sales motion and that approach that we take of going on a journey with a customer and being able to grow incrementally, we're able to continue to expand our revenue retention rates 160%. Our lifetime value for customers currently at 667K. It costs us 43K to acquire a customer. So we get that paid back in 8 months. We're happy if that continues to increase up to 12 months. We don't want it to go over 12 months. So we think we've got plenty of headroom to continue to invest in landing customers because they become so profitable for us over time as they continue to expand. And our lifetime value to CAC ratio is 16 times as well. And as at 30th of June, the 136 million total customer lifetime value. Next slide, please. And just a bit of a snapshot of, I guess, how we've executed on that land and expand strategy. Excuse me. So we landed 32 new customers for the year and we expanded 34 customers. And you can see the logos on the screen there. These are well-known established corporate and enterprise customers. Not only do these customers have a serious problem with what we're solving for them, but they're at the sort of scale where we can actually have a meaningful impact and actually create high returns on investment. So it means that as we grow alongside our customers, our revenues are continuing to grow over time. So from a size of customer, some of our smaller customers in that corporate enterprise space are worth in the sort of 50 to 60K a year. And some of the bigger ones are up towards the 800 to 900K a year. Next slide, please. Just very quickly, we listed last year in the ASX in December. That's given us the capital to invest really heavily into the growth infrastructure. Predominantly, that's been people. We've grown our team to 135. The other thing that's been really great about the business is as we've grown, we've been able to really keep very good high customer satisfaction. a net promoter score through the year is greater than 80%. I think the last quarter at the end of June, it was 88%. Next slide, please. Next slide. And then finally, just to talk across the growth pillars really quickly, these are the areas that we're focused on, really strengthening our existing solutions. That may include acquisitions. There's nothing on the cards right now. It's not a focus for us yet. We really want to continue to invest in the value of our products and make sure our customers are getting value from that functionality quickly. We've invested heavily in our sales and marketing capacity and now extracting the value out of that. We've got great relationships with Google as a channel partner. We've got nascent relationships with other global tech vendors as well, and we'll hopefully be able to announce some things a bit more certain in the future on that. And the final piece there is continue to build out that ecosystem for our Wondrous platform, so it just becomes a component of a much broader global marketing technology ecosystem. And I think one more slide and then that's it. So yeah, so just to wrap up, the focus for us is we want to maintain that really strong organic growth momentum that we've got, and we want to target on being cash flow break even by FY24. We want to do that sensibly. We don't want to choke off our growth, but we also want to be quite efficient with our capital. We're obviously going to continue to invest in our product, continue to invest in our people, ensuring that land and expand sales motion continues to drive results, particularly with revenue retention as we continue to grow those customers over time. And finally, they keep investing in the product ecosystem and our channel partners. So that's the focus for Xpon. So thank you. I'm sure there's some questions, Tim.
There is some questions. Thank you, Matt. Just on that third-party cookies, I mean, we've seen on every website at the moment, and you've spoken about how that kind of plays into your hands in regards to first-party data. So how does that actually work? How does that play into your hands, and how does that work with your relationship with Google, for example?
Yeah, absolutely. So just really quickly, a third-party cookie is a really simple bit of technology. It's essentially a text file that lives in your browser, in your internet browser. As what it was able to do is track where you go on the internet. So every website and every page got written to that file, and then third parties, whoever they might be, could read that and get that data about you. And I guess that's how Facebook got so big, selling ads and knows everything about it, because they've exploited that technology. As the vendors have stopped that, you may have seen a lot of talk about this, particularly with Apple. Apple, when they blocked that, Facebook have said it's going to cost them $10 billion in the first year in lost revenue. So it's a massive problem. So what our platform does is it allows our customers to use data they already have about their customers. So that could be their purchasing history, their browsing history on their own website. There's lots of CRM data, there's lots of different sources, anonymize it, and then send that back out to Google, Facebook, or whoever it might be, and then use that data to target advertising against. So it enables, I guess, this ability for that third-party data that's decaying and going away to be replaced with more valuable and relevant data, which is first-party data. And in fact, the results we see from our customers around the effectiveness of their marketing when they use first-party data, it's very, very strong. We're about to release a case study shortly, but it's in the high 70-80% improvement rate on the effectiveness.
Yeah, it'd be fascinating to look through and talk through a real example. I think it'd help explain that moving forward. Now, there's just a question here on your revenue growth. You've had strong revenue growth of 145%, I think, in the financial year 2022, but you've got an increase in costs in regards to your operating expenses. Can you talk through what has driven that sort of increase?
In the costs or the revenue?
Yeah, just the costs.
Yeah. So predominantly investment in people. Like when we listed in December, like a large part of the use of funds from the IPO was building out sales and marketing capacity, and also delivery capacity around that as well. So the last 2 quarters, we've had some fairly heavy lifting with our recruitment. This quarter that we're in now will be the last quarter of heavy recruitment. We'll see that stabilise. I think we've disclosed previously that we think this financial year will sort of cap the year at 160 headcount. And at the end of June, we're at 135. So as I said, most of the heavy lifting's been done on that now. And now it's about extracting the value from it and generating that operating leverage to get to scale.
I mean, there's some fantastic margins in your business. Can you talk through that cost of acquisition? That seems like a big number, even though the contract values are quite high.
Yeah, so it is an enterprise sales cycle. So there is a lot of inputs into that. So the way that we calculate the CAC, it's all of our marketing expenses. So that's things like advertising, events, trade shows, those sort of things. A large portion of the salaries of our sales team, I think it's 80% off the top of my head, of a sales team salary gets put into that, plus any sales commissions they get paid. So you do get a really transparent, true view of what it actually costs the business holistically to acquire those customers. Probably the other thing to note too, on our lifetime value, which was 667K, that's gross margin. That's not total, it's gross margin. So, you know, that gap between 667 and 48K, that's in gross margin dollars, not in total revenue dollars as well.
And obviously, Australia is a big part of your revenue, and the UK. Where's the US sitting in this equation? And is there anyone in that market that you consider a competitive? Is that a step too far?
Yeah, look, for now, we're not focused on North America. There is some very big global competitors. So particularly with our wondrous technology, we do go up against the big suite vendors, so Salesforce's, Adobe's, Oracle's of the world. I think our competitive advantage over that is that we're a niche player that can plug into an existing technology stack. You don't need to buy everything to get value from it. We can make the technology they've got work even better. And our platform is what we call a no-code platform. So you don't need any technology skills or data science or programming skills to use it. Whereas a lot of these other vendors have, you need to be quite technical to get the value out of it. So we're focused on UK and then broader Europe. We do have some customers outside of the UK and in Europe. And we'll continue to expand there as well. And Australia and New Zealand for now is the focus.
Okay, Matt, that's all we have time for. Have a nice weekend. Great to hear the Xpon story.
Thanks, Tim.